Abundance Stock Advisors. Let's make money.
To get notifications on all our future videos, subscribe to our channel and press the bell icon.
Hello, this is Sujit Singh, welcoming you on behalf of Abundance Stock Advisors. Abundance Stock Advisors is a SEBI registered research analyst group, and we strongly believe that stock markets is one of the best investment platforms to park your hard-earned money. Now, as per historical statistics, stock markets offers you the best returns in comparison to any other investment platform in the world. But statistics also reveal that only 2% people make money in stock markets. 98% investors, which mainly include retail investors, are on the losing side. And the only reason for that is retail investors, they lack the necessary investment knowledge. They are always easily misguided. So, in this video, we wish to reveal the 10 golden mantras of stock markets. If you follow these mantras religiously, you could become one of those 2% investors who make money in the stock markets. We request you to watch this video till the end, and trust us, it's going to change your life as an investor for good. You will always remember these 20 minutes as one of the best investments you ever made in your life. So stay tuned.
Mantra 1.
In stock markets, all retail investors, they go through a very funny experience. Whenever they buy a stock, it starts falling, and whenever they sell a stock, it starts rising from there on. Ridiculous. Does this happen to you as well? Let's understand why exactly this is happening. Hey, Mr. Rahul, please come. This is Mr. Rahul, who's a retail investor friend of ours, and he wants to buy his favorite stock. Which one is it, Mr. Rahul?
Big Cellular.
Okay, it's Big Cellular. Let's see the current market price of Big Cellular. It's currently trading at 50 rupees. Now, over a period of time, this stock moves from 50 to 60, 60 to 70, and subsequently reaches 100 rupees. So we call this rise as an uptrend. Now, our friend Rahul has been watching this stock move from 50 to 100, but he has not yet bought it. Okay. Now let's see what happens next. Now, after the massive uptrend, this stock breathes and fluctuates a bit. 100 to 105, 105 to 100 again, 100 to 95. So we call this sideways movement as consolidation. Now, our friend Rahul has still not bought this stock. He's still watching it consolidate. Now let's see what happens next. Now all of a sudden, one day, this stock starts falling. 100 to 90, 90 to 80, 80 to 60, and back again to 50 rupees. It's the same level from where Mr. Rahul has been watching this stock grow. So we call this fall a downtrend. This stock is in a downtrend. Now Mr. Rahul has seen this stock rise from 50 to 100, and now when the stock is back to 50 rupees, he sees this as a tremendous buying opportunity. And obviously, because he believes that the stock will rise again to the 100 rupees levels, giving him a 100% profit. So with this thought, Mr. Rahul goes ahead and buys Big Cellular at 50 rupees. And this is where 98% retail investors go wrong. The moment Mr. Rahul buys this stock, the stock starts falling. 50 to 40, 40 to 30, 30 to 20, and then to 10 rupees. Obviously, because the stock is in a downtrend, it's a falling star. Investors are just dumping it. Let's do a health check on Mr. Rahul now. Seeing the stock at 10 rupees, Mr. Rahul is utterly disappointed. He never dared to sell the stock while it was falling, because all the way he always felt that the stock would move up. It would move up. But that never happened. Now, let's say for almost 6 months, the stock consolidates between 10 to 15 rupees. And then one fine day, it starts moving up again. It's safe to say that the uptrend of the stock has started again. 10 to 20, 20 to 30, 30 to 50 rupees again. Mr. Rahul is seeing the stock back at 50 rupees. It's been a while that he has bought this stock and has not seen it grow. He has also gone through a lot of emotional turmoil when the stock fell. So today, he doesn't really care for profits. He just wants his invested capital back. He's not sure what the future holds for this stock. So he goes ahead and sells it at 50 rupees. And what happens next? The stock starts running 50 to 60, 60 to 80, 80 to 100, and it rallies well beyond 150 rupees. Almost all the retail investors go through this experience. They buy stocks in downtrends and sell in uptrends. Friends, we revealed the first mantra here. Stocks move in trends. Always buy in an uptrend, sell in a downtrend, and do nothing in a consolidation trend. Never go against the trend because the trend is our best friend. Friends, stocks keep changing their trends. Every uptrend is followed by a downtrend, and every downtrend is followed by an uptrend. And there are those consolidation phases that come in between. Now that's the nature of how stocks move, and that's how opportunities, they keep coming in the stock markets. This is natural and it's very, very healthy for the markets overall. If you understand this, you understand stock markets much better than before. This is the secret. Abundant stock advisors always give their clients a buy call in an uptrend and a sell call in a downtrend. There is absolutely no compromise on this.
Mantra 2.
Friends, I am here standing today in one of the biggest steel plants, and I wish to share something very interesting about a very popular steel stock. In August 1997, share of Tata Steel was trading at 140 rupees. In December 2008, the share came back to the 140 rupees levels. Can you believe this? In these 10-11 years, the company, it grew manyfold, but the share price, it came back to those levels as it was 10-11 years back. Why? You must have also come across shares that have doubled, tripled, quadrupled in a year. Example, in January 2017, India Bulls Ventures was trading at 22 rupees, and in September the same year, the share was trading at 280 rupees. In these 8-9 months, it grew 12 times. Isn't that unbelievable? So does it mean that the business of India Bulls Ventures also grew 12 times in 8 months? Not at all. Then what made the stock run so fast? I mean, with that kind of a speed, it could have, actually beaten even Usain Bolt. So jokes apart, friends, it's economics. It's pure demand and supply. When a lot of buyers start showing interest in a stock, they start buying it in huge quantities for whatever the reasons may be. The demand of the stock, it goes up, and the price of the stock also starts increasing. It's natural. Now you will not be able to calculate the peak. It can grow to any level so long as the demand keeps flowing in. Now one fine day, the same set of investors, they lose interest in the stock and start dumping it. This leads to an increased supply. Now supply overpowers demand and the stock starts falling. Now again, you will not be able to calculate the bottom. It can fall to any level so long as the supply, it keeps overpowering the demand. So in short, the rise and the fall of the stock cannot be always related to the business and the operations of the company. We reveal the second mantra here. The business of a company is not necessarily related to its share price movement. Shares go up with an increase in demand and fall with an increase in supply. So when will the demand go up? When will supply come in? This is all research, it's calculation. Basically, it's a thorough study. And it's important to understand and get your calculations right in this demand-supply game. I mean, what's the use if you buy a good stock when it is in a heavy supply mode? And similarly, you can make profits by buying a bad stock in a heavy demand zone. That's the trick. The clients of abundant stock advisors, they always get a buy call on the right stock when it is a heavy demand zone and always get a sell call on a stock which is in a very heavy supply zone. We're a little good at this demand supply game.
Mantra 3.
Hello. Now a lot of retail investors invest on the basis of news seen in either newspapers or news channels. And if you've been doing that too, there's a red signal for you. Caution. This is a trap that's laid only for you. Let's understand how it works. Now, when there is something positive about to happen in a company, the people related to the company, their friends, relatives, already know about it and start accumulating the shares of the company. This leads to an increase in demand and the stock price, it just goes up. After the stock has moved up significantly, these people decide to sell their shares and make some good profits. But to sell their shares, which they're holding in huge quantities, they need massive number of buyers also. So these smart people plant a positive news about the company in the so-called paid media. Retail investors read this news, get excited and start buying shares of that company. Now while you are buying here, they are selling, and mind you, they are selling in huge quantities. So this leads to an increased supply and the stock falls sharply below your buying prices. We reveal a third mantra here. Do not invest on the basis of news seen in media. The news is often planted to misguide retail investors. Now, we are not saying that the news is always wrong. That cannot be. It's just that it's delivered to you very late and of course for selfish reasons. So by the time it reaches you, the stock has already rallied and is now waiting to fall. There have been n number of instances in the past where despite the news being very positive, the share prices of the company have fallen significantly. Now, when the people related to the company accumulate shares in huge quantities, analysts at Abundant Stock Advisors are able to sense that through their techniques. And if things look good, clients of Abundant Stock Advisors immediately get a buy call, and this ensures that they now have some good friends in that company. Achhe.
Mantra 4.
Friends, I am here today at a very famous casino and I wish to gamble and try my luck. Let's see if I can make a fortune today. But before I get in, I'm thinking of rehearsing with you guys with this small little coin that I have. So let's play a small game. I'm going to toss this coin. Heads. Heads again. Let me toss it again. Oh my, it's a heads again. 3 times it's been heads. So what's coming next? Let me toss it again. Is it going to be tails? Let's see. Oh my, it's a heads again. How come? 4 times you've had heads. The 4th time it should have been tails, right? Understand that whenever a coin is tossed, the chances of either a heads or a tails is always 50-50. The outcome, it does not depend at all on the past results. The same analogy is applicable to intraday trading as well. For your information, intraday trading refers to buying and selling shares within the same trading day. All positions should be closed before the market closes for the trading day. So just like when a coin is tossed and you are not sure if it would be a heads or a tails, in intraday trading too, you can never be sure if today a stock would go up or it would fall down. And yes, it's not dependent on the past movement of the stock. So no analysis is going to work here. Remember, the chances are always 50-50. And whenever you take a 50-50 chance, you are indeed gambling. So intraday trading is like gambling. And we all know gambling is a sure shot way of losing money. It's the same like gambling in this casino to make a fortune. So I'm not going in that casino. But let me give you our 4th mantra here. Never do intraday trading. It's a sure shot way to lose your hard-earned money. In all these years, we have not seen a single investor making money in intraday trading. Not even a single investor. So if you don't trust us, you could try doing it yourself and see the results. Intraday trading, it gives you a lot of excitement, but it never gives you profits. You should trust us on this. Abundant Stock Advisors do not provide any kind of intraday recommendations to their clients, nor do we recommend them intraday trading.